Hi, this is Randy Finney with Right Side of the Chart, and this is a morning market update for Friday, July 19th, 2019. I wanted to go over some of the trade ideas that currently have been highlighting recently. We'll start out with the metals and the miners real quick, and time permitting, I'll go over a few of the other trade ideas. Really just focus on some of the ones that I've highlighted in the recent long trade idea video, and then I'll get to shorts in another video update here. I wanted to start out here, let me take this down to 1 month. This is a 60-minute chart of silver futures. And what I wanted to point out here, for the first time now since this rally, we do have divergence. I pointed out yesterday that SLV, the ETF, was coming up to resistance. I had a resistance on silver futures just a little bit higher, and that's been hit today. And so what we're looking at here, could probably even draw a little uptrend line here at this point, is this small. It's very small, but it is divergent high, and it's worth noting. In fact, this is where the divergence comes from. So you almost have a price channel here. You can play around with this lower trend line for sure. I think that's a good fit, and then that gives us a price channel pretty much to watch. And so there it is. Now, yesterday I'd mentioned not making any changes to my my mining stocks, those long-term positions. I actually went through a couple accounts and tightened up where I put raised some pretty tight stops this morning, and probably, since maybe I was about to queue up this video, probably had a couple of those may have stopped out if those come back at all. What I mean by that is, for example, my favorite 4 mining stocks, that was, let's look at those real quick. AG, that one, I have that resistance level here at, what is that number, $10 or so. You can see it on this chart right here. There's a resistance line right there at $10, a big gap back here. It's a line I've had on this chart for, I believe, quite a while. Yeah, I created that line back in 2016. I haven't updated it in over a year. So it's a long-term resistance line, and it was hit today. So that's my point. Like yesterday, we had quite a few coming up to resistance. We have even more today. So on this and a lot of the others, what I did, again, I just went through most of those, about half the position, and just put a much tighter trailing stop than the stop I had on. I should say I had hard stops on most of these, not trailing stops. A trailing stop will automatically adjust with every tick of the stock. Every tick higher, it raises the trailing stop. So I have hard stops, and on these I just this morning, because I figure we'll probably get a pullback here soon at the very least. We're getting pretty overbought, and I just showed you that divergence on the 60 minutes. So while I'm on the miner, I'll just go over those 4 there. There's the XK, same story. So you can see that so far, when you look at today's candles, we are pulling back. So I probably have been now taken out of maybe half of those. EFSM, right at that 375 target level there too, resistance after a brief overshoot. And so again, I wanted to just share my thoughts. Another one, ASM, same story. That one, it's thinly traded. So what I did is, this morning I just sold half my position. Why there's still strength. Liquid stocks are very low volume stocks. If you use a trailing stop loss order, you have 2 types of stops. Stop limit that says, for example, stop limit you could do at 70 cents, we'll just say. And that says sell if and only at 70 cents if the stock goes down, crosses that level, or you could have a trigger at 71 to sell at 70. But the problem is, in a fast moving market, a stop limit order can and often will get bypassed. In other words, a stop limit says sell me at 70 or better, nothing less. So if the stock goes through there and there's not enough liquidity, because on this one you have to buy thousands of shares to even make it meaningful. It's a 73-cent stock, so every 1,000 shares you buy, you're not even talking $1,000 to $730. Well, that's one. Of course, it was a buyback here at 60, but the point being that a stop loss order says, okay, if it hits 70, go ahead and sell it, convert it to a market order. You may fill at 70, you may fill at 69, you could fill at 66. And on thinly traded stocks, that's not such a good idea. So I wanted to share that on that one. I just said, you know what, go ahead, take profits on half. It's a quick, just in the last few days here, 25% run, and this one was highlighted back here before it even broke out. Again, I'm just sharing with you what I'm doing, and I think these, like I said yesterday, I think this is just a start of a much bigger breakout. But there's a little bit of work to be done. There's the silver weekly chart. So we have a solid weekly candle. As I said, it would take a heck of a reversal to undo that breakout. So make no mistakes about it. Long term, looking out weeks, months, possibly even years. So far so good. Still work to be done when we talk, out much more than just let's say a few months or weeks now. Work to be done, but I think it's all priced in the chart. So that's that. That's silver again. That's the ETF, and just kind of give you targets. If you look at where, assuming silver and gold are in a new bull market, then you want to start looking at levels, back in the previous bull market and or the bear market on the way down. There's a huge gap up there that has yet to be, not even close to being visited or tested yet. And from where we're at now, this is silver, the ETF. I'm trying to zero in on where we're at, just as a rough thing. Just to the bottom of that gap, you're talking another 50% rally in silver. And if now you pick your top picks on the silver mining stocks, like some of these, you're talking hundreds of percentage points, not just 50%, because they're going to move a lot more, as they have recently, than the metal itself. So there's another one. I'm on the weekly charts now. EXK at trendline, downtrend line resistance. So the story goes on and on. A lot of these guys getting very overbought near term. Certainly bullish longer term if you're not an active trader, but if you are an active trader, a lot of these at or near resistance. And again, so that was my preference, to just tighten up stops, and if they, I'll also raise the stops on the remaining lots if they take out that first half of the lot that I put very tight stops on. I'm talking within pennies today, just to continue to ride the momentum up, and then as soon as it reverses. And the downside to that too, by the way, guys, tight stops, sometimes and quite often this will happen. A little, here's the trend up, going up, you get a little jog back, your stop is hit, and the thing keeps going. That's fine. That's why, I'm just tightening stops on half now. All right, let's talk about what do we want to look at. I'm sure there's questions about GDX as well. Again, just all looks so good on the weekly charts. Couldn't look any better in the last the price action recently, really since the triangle breakout, back test, and boom, gold's running. And like I said before, yeah, overbought now, just like we were overbought back here, and it didn't stop gold or GDX for a long time. So don't underestimate how much they can run. To me, it's just a matter of, do we come back in, have a little correction soon, and then a rally up. And a lot of that has to do with, I haven't talked about it in recent videos because there's so many individual stocks that I've been covering, but this one, the big one, the Euro US dollar, it's broken out of that wedge. That was a weekly chart. There's a big wedge on a weekly basis. It started to run. It ran up, hit my first target 113, then the second target, the downtrend line, pulled back from there, and it's been consolidating recently, holding above this 111.18ish support, or one. There it is. So many pips on when you trade currencies, they round out to these are called pips to the fifth decimal there. But that would be bullish if we can rally up and break above there. So that's what I'm watching. And today we had a little pullback in the Euro US dollar, and that's brought in some weakness for gold. So the theme is the same that I've been talking about, before it even started, an outperformance in silver, and we're seeing it again. There's another day gold's down, and gold, has broken out of that little triangle I mentioned, on the weekly chart. I had it drawn out recently, a little bullish pennant pattern. It broke out, but again, the euro's been moving down, and that's going to impact gold, and it will impact gold more than silver. Usually it does. And so there it is, another day of underperformance, or I should say outperformance by silver. But it's playing catch up pretty good. It's done a good deal. Hasn't completely closed the gap. By that, just kind of visualize when you go to a weekly chart. Here's gold. Here's the lows back from 2015, lit in December 2015. There's the run up in gold. From that point, gold went so far 37% or so, and most of this big run here silver didn't participate in. So silver, when you go back to the same point in time, there it is. I'm just grabbing at that point. and silver, instead of 37%, is only up 17, and the rally recently wasn't anything close to what it was in gold. So again, as I said, institutions, everybody thought gold, 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 and they left silver behind, and it's just doing what it does. You know, there's a GDX or gold silver ratio. You can look at things like that, and so it's playing the game of catch up, and it still has plenty more to do. You know, you're not going to be dollar for dollar in gold and silver, but it's just what's going on right now. All right, let's talk futures, because I was doing the same thing, tightening up stops in my silver futures. SI actually stopped in reverse today. Had a very tight stop. I just keep raising them manually, and so now, believe it or not, I have a short position as of just before this video here. So why? Well, silver, here's one chart. I'm going to show you a few. SI silver futures, 16,475. In fact, there was a member on the site. He trades silver futures, asked where my targets were, and I said this, and also watch that SLV. You know, you had the resistance there. So you can see on this daily chart, we've hit it, and we overshot it, which is to be expected. Again, I talk about momentum, what I call momentum fueled overshoots. This is a near vertical rally. You have a tremendous amount of upside momentum. Odds are you're not going to stop cold at that level. You know, it's like watching a pitcher throw a 92-mile-an-hour fastball. It's going to hit the catcher's glove. It's not going to stop at that point. Catcher's glove is going to snap back. Same thing when you have a lot of momentum coming into a resistance level. Assuming that level will hold, nothing says it can't break out. But to me, let's, you know, like I said, extreme overbought conditions. I showed you the negative divergence on the 60-minute charts, and there's a resistance on the daily chart. So that's silver. There's that price channel there, the divergence that we're talking about. And so, you know, I'm just going to, like I said, reverse it just for a quick pullback trade. By the time I finish this video, I might even pause it and cover that if we had a little pullback. We'll see. I think I'll hold off, just keep a stop right now above the recent highs. But that's just a really what I call a tactical trade within a strategic long trade that I'll get back into. And the silver miners, and silver's running, you know, that's where I'm leaning more on the silver miners right now than the gold miners. But, you know, gold miners also, believe me, quite bullish and long those two. There's the downtrend line, the breakout this week. This is a weekly candle. So today's Friday. So this thing, barring any kind of crazy reversal, you're going to have a nice big green impulsive bullish candle. It's a 10%. It would have to drop over 10% just to wipe that candle out before the close today. So we're looking at a breakout, solid breakout above this downtrend line on the weekly chart. And again, not to mix words here, that is a longer term buy signal. You know, there's going to be zigs and zags along the way. You know, this is, you know, not a hard level. I'm trying to add this line here. So it's really more of a resistance zone that's coming into play, or I think will come into play, and we're pretty much at the bottom of that resistance zone now. So maybe take a breather here. Who knows? Maybe next week we punch right on through it, but I favor a little consolidation here first. A little pullback, let digest these short-term gains. It would be healthy for the advance and then continue up. But again, that's what I think will probably happen, and I think you know, at the very least, if you caught a good part of this, it wouldn't hurt to tighten stops up. But as you can see here, I'm going to show you, sometimes silver goes until in this case, you had all these were consecutive green weekly candles until that point. That was also the end of the bear market, beginning of the bull market. So you get those usual powerful rallies, just like think the stock market. If you were trading back in March 2009. That's what the stock market did. Once it bottomed, everything was extremely oversold. Valuations were great. It was clearly priced in the technicals here as well, and you had that strong rally. And my point was, you rallied for a couple months there until you had even, you know, one red weekly candle. Then you continued up. Then you started to get some consolidation, a little flagging action actually right there, and then you broke out of that bull flag right here. If you draw two lines there, boom, breakout. So that's what we'll be looking for here. Maybe we get a smaller consolidation. Maybe we don't consolidate till we hit one of these reaction highs. Those would be your, you know, next levels. I'll have to study this chart a little more. But let's look at SLIJ, because that's our, you know, proxy we're using. XLIJ is, let's see what this weekly candle, this one should be a little bigger. I was liking the components of this one better. So yeah, that's 15%. We'd have to try actually more. This weekly candle right here is about 20%. And that's one reason I picked SLIJ. Like I said, individual components look good, and you got a little more bang for your buck here. So we outperformed by about 50%. Just ballparking what the SIL, the senior miners in the silver sector, did. So that's it. There's the 1017 resistance level. We're at 1020 now. That's a good chance we have a little reaction here, and then continue on. It could be a bigger than a little reaction. Could be a pullback all the way back here or somewhere. Who knows? But again, just prudent to at least from me to just take a little profits off and then try to recycle back into those stocks when I see an appropriate time. All right, that's enough on the miners. Other things that I mentioned to keep an eye on would be coffee. Time, if it holds up, which it did, coffee futures, let's look at that. There's JO, because that's what a lot of you will be trading instead of coffee futures. But for those of you that do trade coffee futures, we're still holding above that 105 level. So as long as we do that, and ideally you want to see this reaction high here from July 16th get taken out. The other one I mentioned is wheat. Wheat's still holding the line right there at about 492. As long as it does, I like it. Nice positive divergence. Of course, it needs to get going here soon. Could draw a minor downtrend line, but I might be trying to force that. There's not a lot of reactions, but maybe a pop there. And also, I should add some minor resistance here if we can clear. The prices have been a little choppy recently, so I'm putting the most weighting on this 492 level. But that 500 level, you can see it was support right here. And a little support back here, that would help to see us pop there. So if we can, it'll probably have to occur next week. Who knows, maybe today. That'd be maybe a short-term breakout. Open the door for the next leg up into wheat. That's CW. If you're trading the ETN, you'll use WEAT. And that's what that looks like there. Covered this chart recently. You have the pullback. You have the PPO coming back to backtest the zero line from above on many securities. Some better than others. This works as a nice trend indicator. When it crosses above the zero line, the white, and I'm talking about the 9 EMA on the PPO, the trend is bullish. And when it's below the zero line, as it was this entire point, it says trend is bearish. You don't want to be long, you want to be short the macro trend. And again, you don't trade. I don't trade solely off this. It just helps to confirm whatever type of trend is going on. For example, here bullish, you had a little whipsaw there, but for the most part it stayed bullish there, and most of that trend was bullish. So, and back here bearish. So that's one thing I'm looking at there, as well as the 60-minute chart that I just showed you on the futures. Okay, plenty of time. I'm just going to fly through. I just penciled some of the, and again, I'm sticking with some of the names that I've highlighted recently in the last couple of long trade idea videos. So you can check those on the site by going onto trade ideas on the top menu and go to unofficial trade ideas. Click on unofficial long trade ideas, and then you'll see the recent videos there. So I'm still watching lit. It hasn't gone anywhere yet, but remember, it put in this big divergent low. This is the Global X Lithium ETF. We're seeing precious metals run. I know these are not precious metals. They're lithium's more of an industrial, obviously, but there's the some pretty nice resistance. It's bouncing up against that 2636 level. So I think if it can pop that, it comes up to my next target, which is 2755 and or that intersecting downtrend line. And then of course a break above that would be bullish and lead to more upsides. But even a pop up there, it could be a quick 5%, 6% run up to there, and then maybe a breakout later on. So just one to watch for now. And again, there's your buy signal. We had a little intraday break, proved to be a false signal, whipsaw signal, but you can see a lot of reactions as I tighten up on that line. So watch for an impulsive break above 2636, especially a daily close. That's lit. I want to mention one that just petered out. Not all these. This is one that was mentioned. Rad, R-A-D, Rite Aid Corp. Rallied up, broke out here, hit my first target resistance at 963, but reversed from there. So we got the reaction twice off that level, and it's now come back in within the down below this downtrend line. That's not a good sign, but it is. PPO is still above the zero line. This one could power back up, but as of now, like any stock, that's why you trail stops up or you raise stops along the way. I just want to point that one out. Not looking great right now, but it could, if it reverses, it still has potential. It hasn't taken out the previous lows. Signet Jewelers, another one I mentioned, bullish falling wedge. It broke out, but it's been compressing above this, right below or on this 1870-ish level. If that pops, there's some other potential targets. I have not scrubbed these for earnings. You need to do that. We are in the peak of earnings season. Be aware of the trades that you take. You don't want to take a trade the day before it reports earnings and then have a bad earnings report that goes against you. So keep that in mind. Again, if I have scrubbed any for earnings, I will tell you, but I did not on that one. Let's see. L Brands broke out of the wedge, rallied up, hit that 28 target, pulled back, and it's bouncing. It's in no man's land right now. I probably shouldn't even bring it up. There's no actionable move if you're not already in it. 20, 25 or so is support, 28 is resistance. I call this no man's land when a stock is trading smack in the middle of support and resistance. So, next buy signal is on a solid break above 28. Bearish if it drops much below 24.94 or so. Here's one I had on my watch list and meant to share the other day, but I didn't, so I'll point it out now. Lumber futures had it was this downtrend line right here I was watching. We broke above that, and this just recently happened. I saw this little flag here, and we popped above the flag. I'm not sure how much meat is left on the bone, but my target is up here. If it can get all the way up there on a counter trend rally, it's about 370 or so. So if this is just kind of an FYI, I didn't point it out, but I don't believe I pointed it out before. Maybe I did within the trading room. That's quite possible. And if you're in it, that's just what I wanted to mention. So far, it's moving up. But I'm not crazy about it. This would not make an official trade idea right now. I'm just sharing this because I know there's a lot of folks on the site that like to trade futures. And you don't have an ETF for lumber. You have actually, I'm not showing you that chart, am I? There it is. I realize I'm on a much larger monitor and I'm putting these charts on here, and so I got to get them within the little box for the video capture. There are just a couple ETFs that cut and wood, but they don't hold lumber futures. They hold lumber stocks, timber stocks, forestry companies. The ones that cut the trees down and mill them and do all that good stuff, or anything related. So that's what cut and wood look like. But again, they are not lumber futures. They will track lumber futures. I put up charts in the past showing you long-term charts, not day to day, but the trends certainly match the trends of lumber futures. But I was showing you LB, which are random length lumber futures. Cato, this is one of those apparel stores I highlighted recently. Big falling wedge, broke out, went up. Could be flagging here. I have not scrubbed this for earnings, so you may want to do that. Maybe they already reported, maybe not. I don't see any big gaps recently, but that you don't always have a gap when you report. So maybe a potential bull flag. That's why I wanted to point it out. So as long as earnings are out of the way or not on deck, when a company is getting within a few days to a week or so before reporting, a lot of times they go into a holding pattern because nobody wants to take a big position in front of earnings. But maybe look for an impulsive break, and then that would take us up to my next target zone here, which is about 1530 to about 1546 or so. Resistance zone, target zone. Cato, CATO. CBDS, any movement there? Yeah, that one's still holding above that level there. Not yet hit the second target. Still holding above the first target. Yeah, I think as a sector as a whole, I think the pot stocks probably have a little more downside. At least they have a little more work to do. I just updated MJ yesterday in a video. GUY, I mentioned this gold stock the other day, is GUYTO, the one that trades on the Toronto Exchange. It had broken above my 123 target. We had a bullish falling wedge breakout, ran up there. I highlighted it in a video here. Since broke out. There's certainly some levels along the way, and I expect reactions, but my next swing target is up there at 185. But there's also, if I did that, I have a lot of Canadians on the site, but GUYFF, you can also trade it, on the U.S. Markets with this one here. So that's a similar pattern. I'd have to, I had the trend line down here, didn't I? Yeah, that's where the trend line was. And then, ultimately, I just wanted to give you a comparable target on that. Be right up around, somewhere around that area, about 141. All right, and then Weight Watchers. Somebody asked about it yesterday. I highlighted in a recent video. It was in no man's land when they asked me about it, and now it's already moved up to, see, no man's land was between, this was the breakout point, 2188. You had a basing pattern here. I'll highlight that for you. There's a basing pattern. There's positive divergence at the low right there, bullish divergence, breakout of a trend line and a back test. So a lot of things on this chart. This is a nice example for technical analysis. Many things there. You almost had it's WW as their symbol, and you kind of had a what we call a W bottom. Maybe an extra leg on that W. But either way, boom, broke out, and nice little run from 2188 so far. Move that trend line back. Could play around with it. You could say, yeah, I could move it there and say that's a breakout of the downtrend line, which would be bullish. But so far, we're talking about a 23% run since that breakout. And again, this one was highlighted recently, but it is coming up to my first target, and more of a target zone. You can see here that's technically a backfill the gap when it gets to the bottom of this. Well, the gap starts up here. That's where we gap down from. But when I'm looking at gaps, I like to sometimes look at the lowest reaction point. So we had a candle down there about 27.22, and we're getting close to that now, or we did earlier today. So might be time to take some profits on that if you milk some or all that 23 plus or whatever percent run. Alright, I think I'll wrap it up here. Let's see how so far my reversal on the silver futures playing out. There's that, we're right at the downtrend line now. I could cover there, but I'm just gonna, I haven't stopped the video to do anything yet. I'll go ahead and assess the charts. Where on a pullback might it go? Well, I can see a confluence of a little consolidation area right here, and so that might contain a pullback quite likely. But of course, this I'm sorry, I'm talking too fast here. This uptrend line, the bottom of the price channel, could certainly contain a pullback as well. Like I said, divergent high, but if silver wants to, and it's done it before, it can burn through there, or it can continue to diverge, maybe another thrust up. So I'm going to stop the video and assess this and decide. And what I'll probably do, just like I was long the way up, the last couple of days tightening stops, I'll just set a tight stop in case we do bounce and get back a little profit, but capture that nice reversal so far. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.